What's up, guys? It's Rob here, and today we need to talk about Shopify or Shop stock because this stock has been so oversold over the past year. It's gotten down to ridiculous valuations while all the while maintaining incredible fundamentals of the underlying company. We're going to break down what's happened with it over the past 52 weeks just about, and I'm going to explain why I actually just bought some earlier today because this is such an incredible company, and it also has a pretty cool mission, right? They're doing something pretty cool. So Shopify, for those of you who haven't heard of it, is a company that enables small businesses to engage in e-commerce. They also enable large businesses to engage in e-commerce, but they're essentially an Amazon competitor. They don't directly sell things themselves online like Amazon, but instead they provide a platform where people can create their own online stores and then sell things as a small business, as a large business. Anyone who wants can easily create a Shopify store and start selling stuff. I've done it. It takes maybe, a couple of hours with the layout they give you to fully set up the thing. If you have the images and branding that you need, then you just throw it all together and boom, you have an online store. So it's a pretty cool service that they offer, and it does directly compete with Amazon because it allows individuals to start selling products on their own websites and collecting their own revenues rather than going through Amazon. So it is an alternative to that. And a lot of people don't like the fact that Amazon seems to be becoming a big monopoly, but Shopify is certainly helping out by helping to diffuse the e-commerce space and allow more people to engage in it instead of it just being one big monopoly like Amazon. They help with shipping and all kinds of stuff. So really cool business model. I've used them. They're very easy to use and a pretty potentially profitable business when times are good, right? If you're selling the right product. So with all that said, I'm going to break down what's happened with their stock price because you can see it's fallen dramatically over the past year, as all things have, right? We are in a recession right now, and Shopify stock has suffered quite a bit. Now, over the past 50-ish weeks just about, you can see we've moved down from highs to lows, down about 83%. And this is just going to give you an idea of the potential gains that could be seen if we did end up making back some of those losses. If we just got to where we were at the beginning of 2022, that would be about a 388% gain on Shopify stock if you bought at its current price. And if we moved back to the all-time highs, which we've fallen from within a year, that would be a 522% gain. Now, I'm not saying that's going to happen instantly, right? We are in the midst of a recession. A lot of stocks have been moving down and for good reason, right? The Fed's been really crushing us with these interest rate hikes. But Shopify, I believe, does have the potential to rise back to these numbers within the next couple of years because they've been experiencing incredible growth even while we've been in recession. Now, I'm going to break this down for you. We have in 2022, in the first half of 2022, they've reported $2.5 billion in revenue. Now, if you annualize that number, since that's just the first half, assuming they'll do the same in the second half as they did in the first half, that's about $5 billion in revenue in 2022. Now, that's impressive because in 2021, their total revenue was $4.6 billion. So they actually managed to grow their revenue in a year when the entire economy, when GDP was shrinking. So very impressive stuff. Now, it's not as impressive as the growth that they saw going from 2020 to 2021. From those years, they saw 57% growth. And going from 2021 to 2022, they only saw about 8% growth. But 8% growth for a stock that's actually, instead of growing 8%, moved down 80% is a really good buying opportunity, in my opinion, right? I think that when you see that kind of stuff, that's a disparity between what the price potentially should be and what the price is, oftentimes induced by fear and a couple of negative catalysts that we're going to discuss. Now, before we break into that, I did want to show you that e-commerce, which Shopify mainly engages in, is still a rapidly growing area. These are the total revenue for retail e-commerce revenue in the United States, 2017 to 2022, with forecasts to 2025. So 2022, it's looking like we'll have about $875 billion worth of e-commerce revenue in the United States. That number is projected to grow to $1,300 billion, so $1.3 trillion in 2025. We're absolutely expecting e-commerce from retail to explode over the next couple of years, and Shopify is one of the main enablers of that. If you look at the gross merchandise volume for Shopify, in 2021, they had $175 billion, so about 20-ish% of what we saw in 2021 was from Shopify. And that's a 40% increase, 47% increase from 2020 to 2021. Another very impressive thing about Shopify, I'll break down real quick. Their market cap has fallen dramatically over the past couple of months as their stock price has been crushed. They're currently sitting at a $36 billion market cap. Now, what's really impressive about that is that they have cash reserves totaling $7.77 billion. So essentially, when you're buying into this company with a $36 billion market cap, $7.7 billion of that, you're just buying into cash. So you can almost just wipe off $7.7 billion worth of their market cap in terms of what their business has going for it, because they've just got that cash sitting in their accounts and they can do whatever they want with that cash. Obviously, they could spend it. They could try to use it to improve the business, do more research, and engage in new retail opportunities. But while you're buying it currently, it's looking like they've got about $7.7 billion in cash. And so that just makes the stock look even cheaper from a market cap perspective, especially regarding the size of this company. The fact that they are commanding $175 billion worth of gross merchandise volume. So basically how much people were able to sell with their services in 2021, that's absolutely massive. And we should be seeing that number grow in 2022, despite the fact that we're in a recession. So really impressive stuff. Now, if you're worried that they're just engaged in e-commerce, that's mainly what they've been focusing on in the past, but they're also starting to target physical retailers after admitting that they've been overly aggressive in the e-commerce space. So one of the reasons why they did end up sinking over the past couple of months was fortunately they saw massive growth during the pandemic. Everyone started moving online, shopping online, and we ended up seeing that growth slow down. But Shopify had made some big bets on e-commerce. They hired a ton of new employees, some of which they ended up laying off after realizing that those growth trajectories weren't going to sustain themselves entirely. Once again, they were seeing 57% growth or 47% growth year over year. And then they saw 8% growth about this year, right? If we're projecting forward what they could do for the rest of the year. So there have been some slowdowns, obviously, and that has partly led into the declines that they've seen. But I think that the declines have been greatly over-exaggerated, partly because the Fed's been so hawkish and has been raising interest rates. The fact that we've been in recession and pretty much every stock has been getting sold off, I think seriously leads into the fact that this one has been getting sold off quite dramatically. I think that we could see some real big gains in the near future if the overall economy starts to turn green again, if we start to see new positive developments, not just for Shopify stock, which there will surely be in the future, right? They're continuing to grow at a decent rate. 8% growth in revenue in a year when we're in a recession is very impressive. And when we're out of recession, I only expect that number to grow. But once the overall economy starts coming back, that's when we could really see some good numbers coming out for them again. And one thing that I will point out, right, it's not the most positive thing, but it is an interesting statistic. Their PE ratio, their price earnings ratio, is currently at 221. So that is rather high. This is a growth company, right? They're in some of the earlier stages of growth. They're not becoming profit-generating powerhouse just yet. They're still focusing, once again, on a bunch of growth. But it's interesting that they are, at the very least, profitable. That's something that I like to see when a company is at least profitable, right? They're not overstepping their bounds. They're not taking out debts. This is a bit more conservative than some of those, than some of the more out there, small market cap companies that you might see that are taking out debts to fuel their research. And those can be a little bit risky. But Shopify, I have no doubts that it will succeed in the future. I don't think it's going anywhere. The fact that they're profitable and have so much cash on hand, as well as the fact that they've seen so much growth year over year for so many years in a row, and that the e-commerce space, which is their main territory, is only projected to grow in the years to come as more people gain access to the internet, as more people become comfortable shopping online, and there are more delivery services available for companies, and shipping becomes less of an issue. You don't have to wait so long for items to get shipped out. I would expect this company to grow massively, and I just wanted to explain some of the reasons why I bought into this stock. Obviously, none of this is financial advice. You guys don't have to follow me if you don't want to. It's just my opinion I'm putting out there, letting you guys know what I'm doing, buying up some great companies during this recession that I think are going to explode in the years to come when we actually get out of the recession. So I'm buying for the long term. If anyone's interested in more of this kind of content, feel free to subscribe to the channel. And other than that, check out the link in the description where you can join our free private stock group where I talk about this kind of stuff almost every day. So if you guys are interested in that, feel free to check those things out, subscribe. Other than that, guys, have a great rest of your day. I'll see you in the next one. Bye.